Michigan property taxes. Let's be honest, they confuse everyone. Buyers, sellers, investors, even your cousin who flips homes and has no idea what is going on. Real quick before we jump in, if you want more actual useful Michigan-specific real estate breakdowns that will not put you to sleep, hit that like button and subscribe. All right, now let's break this down like you're 5 years old. Hi, I'm Ryan Maceri with Maceri Home Group, and I help families all over Southeast Michigan buy, sell, invest, and occasionally talk them off the ledge after they see what the previous homeowner paid in taxes that year. Today, we're gonna fix that. All right, let's start with the plot twist that floors almost every buyer in Michigan. Your property taxes are not based on what your home is worth. Not even close. Your home could be worth $400,000 and Michigan's like, cute. We're gonna tax you at $180,000. And buyers look at me like, Ryan, is this a trap? Is this like a coupon? Is this even legal? Yes, yes, and unfortunately, yes. Michigan basically says, we know your house is worth a lot, but we're only gonna tax you like it's worth half. Unless you move, and then we want the full thing. Michigan uses two numbers, the SEV, which is half of your home's value, and the taxable value, the number Michigan actually taxes you on. Think of SEV like a sticker price, and the taxable value like what your kids claim they spend on Fortnite skins. When you own the home, the taxes are capped. They can only go up with inflation, usually 3 to 5% a year. It's nice, predictable, kind of that dad bod energy. But when the home sells, Michigan hits that uncap button like a TikTok challenge. Taxable value resets to real market value, and now your tax bill looks real. Now this is the section that saves people thousands. How your taxes are calculated depend on whether you own the home or you're buying it. Let me explain. If you already own a home, your taxes are taxable value times the millage rate. If you're buying a home, do not trust the seller's tax bill. It's capped tighter than your jeans at Thanksgiving. Your future taxes will be based on the SEV times the millage rate because the home uncaps at the sale. That's why the seller pays about $2,800 and you suddenly owe $4,600. Now you got two options. One, you can Google Michigan Property Tax Estimator and it will bring you up a website where you can estimate your taxes. You just plug in your county, your city or township, your school district, and then either enter in the taxable value if you already own or the SEV if you're gonna buy. And boom, it spits out a super accurate estimate. Now, it does use last year's millage rates, but Michigan barely moves year to year, so they're the dad jeans of tax numbers. They're reliable, steady, and they don't go anywhere. Or option two, just call your local city assessor. When you call, just say, hey, if I buy this home for X amount of dollars, what would my taxes be coming up? They'll tell you instantly. They deal with the panicked voices all day long. And they have the updated millage rates for the current year. All right, now's the part where everything finally clicks. Real numbers. Chippewa Valley Schools in Macomb Township. The Homestead exemption, which is your primary residence millage, is about 32.59. Your homestead is about 50.59. Based on a $150,000 taxable value example, your primary residence exemption is just under $4,900 and your non-homestead is under $7,600. That's a $2,700 difference just because you didn't live there. Landlords everywhere, why does Michigan hate us? Now, Utica Community Schools, right next to each other, right in Macomb Township. This is the difference. You got 27.45 millage for homestead and 45.45 for non-homestead. Based on that $150,000 taxable value example, you're paying about $4,100 for principal residence exemption, and non-homestead is about $6,800. So depending on which side of the street you live on, you're either paying for a nice weekend getaway or maybe a new alternator. Now, you might be able to lower your taxes by appealing your assessment when it comes in. Make sure you do file for that homestead exemption because that's going to get your taxes down roughly 30 to 35%. If you're a veteran, there's veteran exemptions, and there's some hardship programs if you qualify. Michigan will not lower your taxes unless you give them a really good reason but it's worth trying. Michigan property taxes do seem terrifying, but once you understand capping, uncapping, millage rates, and taxable value, you're basically smarter than 90% of the internet. And if you want me to run your numbers, reach out anytime. My name is Ryan Maceri. I'm with Maceri Home Group, helping families make smarter real estate decisions minus the surprise tax trauma. Drop your city in the comments and I'll break down your tax rate next. Make sure to like and subscribe, and we'll see you next time.